What's up, everyone? It's Scotty with MoneyVest. So collectively, semiconductors and chip stocks lost almost $500 billion yesterday in the entire sell-off that took place, with ASML dropping over 12.5% on the day, with Applied Materials down over 10.5%, Advanced Micro Devices down over 10%, Lam Research down over 10%, Qualcomm, TSMC, Broadcom, and my favorite semiconductor ETF from VanEck, SMH, was down over 7% on the day. The pain was quite real because I did experience a day loss of about $3,410 just in one ETF. Even though it's a small position in my entire portfolio, it is still, I'm very confident and bullish in semiconductors and chips for the long term. Jensen Huang also selling some shares, which I want to discuss in this video. ASML's earnings also came out with a huge beat on both revenue and earnings per share, and the entire sector getting more pain. In other words, the entire sector going through a bit of a crisis after comments from both Joe Biden and Donald Trump as well, with respect to how they view the threat over in China and the news out of Taiwan as well. So this right here was the sell-off. SMH, one of my favorite ETFs, as I've already mentioned in my previous videos. I feel like there's a lot of potential for this ETF that owns essentially a lot of semiconductor stocks that I just went over, down over 7% in one single day. That is a lot of volatility. This is not why you invest in ETFs in general, is to avoid some of that volatility and take advantage of a diversified fund. But in SMH case, in the case of semiconductors here, it only really has 26 stocks, and those 26 companies are pretty much the ones that I just went over, right? So if you want some good exposure to semiconductors as a whole, instead of investing in individual stocks, I believe SMH is a very strong ETF to consider. I'm still up on the overall position, of course, but of course, yesterday's loss was quite painful and quite brutal, although we are seeing a bit of a bounce back higher pre-market as of the time of this video. So going over to what really happened here. So coming over to the entire sell-off. So there was, of course, some tensions with respect to China trade sanctions from Joe Biden, and also some of the comments from former President Trump related to Taiwan and how they should pay the United States for the defense that's being provided for to Taiwan. In other words, the protection that they're getting with some threats that China has given to Taiwan. So S&P 500 and NASDAQ declined on Wednesday, with major chip and tech stocks leading the fall on worries about the trade sanctions on companies giving China access to advanced semiconductor technology. Now, this has been going on for some time. Nvidia has been dealing with these sanctions. ASML has been dealing with these sanctions as well. A lot of companies in the semiconductor and chip space have been dealing with these sanctions, and they are restricted, or certain segments or products or services of their companies are restricted to be exported or sold over to parts of China because of these sanctions, because the United States obviously does not want China to advance when it comes to chips and semiconductors, because they believe, or they feel, they're using this technology to weaponize some of their intelligence, and of course use these technologies to build and advance their own economy. So there's obviously a huge geopolitical risk tied to this entire sanction. And a report news agency Bloomberg said President Joe Biden is considering the most severe trade restrictions available if companies like the ASML and Japan's Tokyo Electron continue to ship advanced semiconductor technology to China. Moving forward, chip stocks shed $480 billion on China trade fears and Trump's Taiwan comments as well. So Wall Street semiconductor index lost over $480 billion in stock market value. So collectively, a lot of these companies lost a ton of value. Nvidia alone lost over $200 billion after reports said that Washington was mulling tighter curbs on exports of advanced semiconductor technology to China, in remarks from the Republican presidential nominee Donald Trump saying key production hub Taiwan should pay the United States for its defense, deepened selling in chip stocks. And the U.S. has told allies it is considering using the most severe trade curbs available if companies continue giving Beijing access to advanced semiconductor technology. And U.S. listed shares of Dutch chip-making equipment provider ASML slumped about 11% following the report, even though it beat second quarterly profit estimates as well. And AI heavyweight Nvidia fell almost 7%, losing more than $200 billion. And some of the smaller companies like AMD dropped 8%. Qualcomm, Micron, Broadcom, and ARM were all down more than 5% on the day. And this right here is Bob O'Donnell, chief analyst at Tech Analysis Research. And they essentially said, and I quote, market reactions are likely short-lived because the fundamental factors driving these markets haven't changed. Yes, US restrictions on shipments to China will likely increase somewhat, regardless of the US election outcome, but they have already been in place for a while. So I fully agree with this analysis because this is not new information. This has been going on for some time. I've done similar analysis on Nvidia a couple years ago, back in 2022, back in 2023 as well, when these sanctions first were introduced. We calculated, and it affects less than 1% of Nvidia's overall revenue. Yes, China is a big market for these companies because China is also a big consumer for manufacturing, for technology, for a lot of other digital trends that are first progressing over in China that of course come later to the western part of the world. But overall, China is a big consumer for advanced technologies, and chips being the brains behind every piece of technology. Yes, it's a big market for these companies. So yes, on surface level, it does sound pretty threatening. It does sound pretty concerning that these sanctions are going to restrict some of that export over to China. It's going to restrict some of that sales, and that revenues and earnings are going to be lower. But this has been in place for some time, and I do believe that it's going to be short-lived because companies are always going to find ways around these sanctions and these restrictions, as Nvidia already did, right? So they were restricted to sell their H100 GPUs, then they transferred over to H300 and some of the other products that they're selling over in China as well. And ASML, and I'm sure a lot of other companies are going to do something very similar, where they do kind of bypass, they kind of still continue to abide the law and the restrictions and whatever sanctions been put in place, but they are able to work around it and of course bypass, continue to keep the sales and the revenues higher. And I do believe that it's going to be a little bit more short-lived because, as we've already witnessed in the past, nothing really has changed because it has already been in place. Now, a lot of fear is flooding around Twitter and a lot of other places related to Jensen Huang selling Nvidia shares. So within the past week, Jensen Huang and Mark Stephens and Ajay Puri sold combined 1.7 million shares worth over $231 million. What's going on at Nvidia? So Nvidia's CEO sells another $30 million in shares as part of the option plan. I think it's really important for people to understand how a Rule 105B/1 plan essentially works. And this is a plan between the insider and a broker for automatic sales. So Nvidia CEO Jensen Huang sold another small block of his shares this week worth $30 million according to the SEC filing. I'm sure it was a Form 4 filing. And the shares sold on July 15th and 16th range in values of about $126 to $130. Huang still owns approximately 78 million shares of Nvidia stock, and the reported transactions were affected pursuant to a Rule 10b-51 trading plan adopted by the reporting person on March 14, 2024, and this follows Huang selling over $30 million worth of shares from July 5th through July 8th, and $169 million sale during the last week of July as well, or last week of June. Now, the way this thing essentially works is, so from what my understanding is that what they do really is that Jensen Huang has had a broker, and what they do is they kind of lay out all these different criterias. They give instructions because, of course, Jensen Huang and a lot of other insiders have a lot of non-public material information, right? So in other words, they've got MNPI, right? So that's a material non-public information. So once you are an insider of the company and you have a lot of understanding of the business dynamics, you know what companies you're looking at from an acquisition standpoint, you know what the company's working on, all that good stuff. Obviously, if you were a trader, right, you could trade on that information and make a ton of money. Of course, that's illegal because that's called insider trading. And that's why these rules are in place, because insiders then can instruct their brokers to take a certain action at certain times, at certain prices, with certain number of shares, predetermined already, sometimes months, weeks, or even years in advance, and the broker just executes on that plan. So it's part of the automatic plan, whether it's buying or selling, that a lot of these insiders opt for and have no control. It's not like Jensen Huang is actively going onto this brokerage app like Robinhood and like selling $30 million worth of shares and just like happily tweeting about it. No, it doesn't work like that. This is already a very, very good predetermined plan in place that a lot of CEOs follow. And of course, there's lockup periods as well where they can't do anything with the stock. But once that lockup period is over and they've instructed the brokers to act on their behalf, it's already predetermined weeks, months, sometimes years in advance to sell the stock or buy the stock at whatever price points and whatever time frames is already determined. So this is not something to be going crazy over that Jensen Huang is exiting the position or getting out of Nvidia stock. It's time to sell and liquidate and run out of technology and run away from semis. No, this is just part of the process. Very, very small position. Anyway, he still, of course, owns almost 80 million shares. And this, of course, is the entire ecosystem within semiconductor sector. So the bottom line is I'm still buying more shares when it comes to semiconductor and SMH. When it comes to ASML, they ended up beating both EPS and revenue expectations. However, they did decline on a year-over-year basis across the board. So they did report, and this is going to be in millions of euros. So 6.2 billion euros is what they reported, down about 9.5% on a year-over-year basis, and then coming down to 9.3% decline in gross profit, almost 19% decline in operating income, and that's year-over-year numbers, and about 18.5% decline on a net income, bottom line profit, and earnings per share also down by about 18.6% on a year-over-year basis for this company as well. So before we move forward, I do want to mention if you want to get access to the entire MoneyVest platform, if you want to access all the benefits, including trade alerts, trade ideas, find out exactly what I'm buying and selling, as well as access the MoneyVest platform where you can do your full fundamental analysis on individual stocks. Link's going to be down below. We'd love to have you on board. There is a 51% discount. I repeat, 51% discount that's available until the end of this month. And after that, it does expire and it's going to go away. And the prices, of course, are going to go up. So if you want to lock in that price for life until, of course, you cancel, link's going to be down below. And we'd love to have you on board. Now, a few more things I want to mention about ASML is that it was already trading at a pretty expensive valuation, because if you take a look at the price to earnings on a forward basis, trading at over 55, price to free cash flow trading at over 100, price to sales trading at a little bit over 13 to as much as 14 on a forward basis. So it was trading at a bit of an expensive valuation to begin with. So I don't see how I could make a case for why ASML was justified trading at well over $1,100 a share. I ended up exiting out of my position with a very nice profit on ASML. I believe in the 900s, might be in the high 800s, but support level next for ASML is going to stay put down to 864. So that's going to be the level to watch. That's going to be aligned with that 200 simple moving average. And as we already know, that the entire semiconductor sector was just ripe for a potential pullback or a correction, given how overbought it was, and given there was a negative divergence as well, meaning that there was a bit of a higher high in the entire sort of price action. So you can see the higher highs over here, and of course the lower highs for the RSI, suggesting for weaker breath on this move higher, and it was just very much ready for a bit of a pullback. It just needed a catalyst, and we did have not only a geopolitical catalyst, but also a catalyst related to the company's earnings, which again declined on a year-over-year basis, some softening in the overall market here related to semiconductors, some corrections, some profit taking, as well as the news related to insiders selling as part of their 10b5/1 plan. And of course, not to mention the catalyst related to the rotation out of technology and semiconductors over to small caps and mid caps as part of what we've seen over the last week. So bottom line is, what am I doing? Planning to buy more and add more shares to this ETF. We'll continue to pick up more shares because I do believe that long term, there's going to be a ton of potential for semiconductors, as I've already mentioned before in one of my previous videos. I'm actually going to be reading a book on cybersecurity now, because I believe that after semis, cybersecurity is going to be the next opportunity in tech where there's going to be a lot of potential for growth and for investment returns. So I'm going to be doing a video on that very soon as well. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Link's going to be down below if you want to join. Take advantage of that 51% discount that's available until the end of this month. That also gives you access to our entire Discord channel, all the private channels, the server, and all the trade alerts as well. So link's going to be down below. We'd love to have you on board. Happy investing. I'll see you all in the next video.